Thanks for tuning into Talking Point. A bit late today, but I'm your host, Niraj Shah, and our guest today. The case for a chat. Let me first establish the case for a chat and then introduce our guest, just the perfect person to have. The focus today of Talking Point is on healthcare. Is it the right time to invest in healthcare broadly? And we've asked this question to this guest now for 2 years consecutively. Selectively, some of those pockets have turned out very well. Are diagnostics stocks finally starting to see a change in trend? Well, if the recent quarter numbers and the commentary goes by, maybe there is hope. More importantly, is the hope justified in the CDMO players on the back of the commentary again that they have given, and maybe, just maybe, some turn in the R&D spends from the global firms? I think somebody who best equipped to talk about that is Dr. Amit Verma, Managing Partner of Quadria Capital. Dr. Verma, good having you. Thanks for taking the time out. I hope all is well.
Thank you, and it's always a pleasure being on your show.
Thank you, Dr. Verma. Great having you as always. Can I just ask with a broad brush view? It's been about 6 months that we last spoke to you. Have things changed quite dramatically on healthcare, or do you reckon that the investing trend has largely remained the same?
So first, let me start off by saying I need to be honest because you quiz me every 6 months. So I need to be clear that my consistency stays. The trend in healthcare investing continues to be bullish. It is very positive, not just in India, but across the region. I think a lot of it is depending upon the case utilization and the fact that there is a high throughput through all facets of healthcare. And this is a post-COVID phenomenon where I think people have started to realize and focus a lot more on their health. I also see another positive change that the realizations have gone up. And that is again beginning to augur well for our industry.
Most certainly. Sir, the last, or at least before 2023 began, the conversation was about whether there will be pricing pressure in the US markets. I'm starting with the generic players, and then whether it will change. I think we've seen some bit of positivity out there in the last 12 to 18 months. It's shown in the way the business metrics have played out. Maybe one can argue that for the Indian players, there's one generic Revlimid that has been the savior. But even aside of that, the companies have sounded a bit more sanguine. Has it run its course because it's typically a cyclical business? Or do you believe that there is merit in looking at this US generic players market a bit more constructively, even now?
So, Niraj, let me try and answer it beyond Revlimid. I will come back to it for a second. Sure. But I do believe that there is a US pharma macro that is playing out. There are a huge number of drug shortages that are in the US, and most importantly, from an Indian player, we are beginning to see price stabilization. I think that's happening, especially in the small molecule category. So that is enabling a shift that's taking place. And I think also the upcoming patent cliff issues, where a lot of the drugs are going to go off patent, especially between FY25 and 28, the macro is coming together to make it positive for most drug manufacturers out of India. I think also when the pricing pressures were taking place and the world wasn't looking as good for Indian pharma played it smarter. So for example, they got out of unprofitable product lines. So all in all, while Revlimid is great for a few players, we think it's going to wane off, but I still continue to stay extremely positive, especially in the small molecule space.
Okay, on the small molecule space. That's part one. Part two, Dr. Verma, is on the CDMO businesses. Now, we've seen commentary from companies which seems to indicate that while the pressure still exists, there might be some change over the course of the second half of the current financial year from an Indian financial year terms. I would love to understand from you, how do you read into what the global R&D spends are looking like currently versus what they might? And is the slight bit of hope that is being exhibited justified?
One of the things that I've always been consistent with you in our interactions is that we are extremely bullish on the CDMO sector. And let me try and explain to you why. So I'll break it up in many ways because we know it grows 11 to 12% year on year. It's a nice $16 billion market for us, and it will continue to grow. But if I were to break up the way I look at the CDMO space today, what are our priorities? Now, when I look at the priorities, it's about refining our price strategies. We want to make sure that we expand the business through innovative strategies. And most importantly, all of us in the space are now looking at newer markets. So we're not just hanging our hat on the US generics. Now, clearly, as I look at trends, there is this great impetus towards flexible manufacturing. There is a lot of digital automation that's taking place, and there is now relationship building with the large global pharma going beyond transactional to strategic relationships. That is a very, very important trend that we're beginning to see. And also, the last, which is very, very important, is the personalized medicine demand. And I think that is something that's going to take off. So, except for the challenge of the ever evolving regulatory landscape, I am extremely positive about how CDMO is going to take off in the next few years.
So, Dr. Verma, the question that I have is, the companies have been now saying for some time that investors need to be patient because these relationships take time to establish. They first need to set up capacities. Only then the global companies will place orders. My question to you is, because you understand both aspects of this investing, right? The VC kind of investing, which is very long-term and patient, versus what capital markets need as well. Do you think CDMO players depict the VC kind of investing mentality needed, even though they are listed and therefore have to show the quarter-on-quarter performance? How should investors approach these players?
Need a very patient understanding of how it plays out. There's a lot of dating, a lot of conversations before it leads to consummation. So to my mind, it requires a specific breed of investors who's willing to wait out the 3 to 5 years to get the returns that they're looking for. This is not going to be a slam dunk and run.
And just one follow-up question, Dr. Verma. How do, for example, I mean, you are entrenched in this, so you understand it better than most. How does one ascertain the probability of success for a CDMO player? Because a bunch of those guys are talking the same language when it comes to the landscape. But the probability of success or the necessity of success is not a given. So how do you determine that when you invest into any CDMO player, for example?
I'm not going to pretend that we are smarter than a lot of other smart people out on the street. I can tell you our approach. When we are analyzing companies in this space, a lot of our focus goes into their ability to specialize and work now on dedicated molecules which are hard to reproduce. So just to give you an example, I would certainly like to invest in a company which is good at fermentation. Fermentation is a lot more of science and art, and that is harder to reproduce. Concord Biotech, as you know, we had invested and IPO'd. So those are the kind of companies that we look for, which have their own niche, which have their own specialization, which others will not be able to reproduce.
Dr. Verma, congrats on this deal, of course. And what explains this investment? What did you like about this ecosystem? Is it a nephroplus specific investment, or do you believe the space at large in India has promise?
Niraj, we've been tracking this company for almost 10 years. It has a rock solid management team. We've come close twice to make an investment. I guess you have to wait for the time when it's right. The first time the company was too small. The second, we couldn't get close to the price they wanted. But I think the stars have aligned, and we've decided now we're the single largest investor now in the company. I think before I try and explain why dialysis, it's very important to talk to you about the prevalence, unfortunately, of chronic renal disease in our country. We create 2.2 lakh new patients every year. About 129 patients per million population need to be on dialysis. And unfortunately, in our country, at least 75% of those patients with chronic renal failure will not get dialysis and will end up dying. Now, these are chronic stage patients who require endless care over 5 to 7 years. And as you may know, we don't do enough kidney transplants in our country. So it is chronic disease. Having said that, we have identified the need to provide high quality, low pricing dialysis for these chronic patients, which, as you can imagine, are extremely sticky. So the thesis was around the fact that there is a need, there is a demand, the patients exist. This is highly underpenetrated. There is now a lot of government support. So the Prime Minister National Dialysis Fund has been established. So there's a lot of opportunity for PPP. So there's a lot of opportunity for us to establish dialysis centers in government hospitals. And clearly, with scale and size, we can bring in the cost arbitrage to make these businesses profitable.
Okay. Okay, and you reckon that I mean, from the statistics that you're giving me, Dr. Verma, it seems that the space is large enough for not just NephroPlus but others to survive and thrive. This ecosystem to get built out in the country.
I have always maintained for a country our size, it's going to take 100 NephroPluses before we would make a difference, and this could be in any spectrum. It's just the historic underinvestment that we've seen over the years. And while government support exists, the private sector will continue to play an important role. And one of the themes that you've seen that Quadri execute over the past couple of years is our great belief in specialization of verticals of disease profiles. So whether it's gastric, whether it's on cancer, kidney, we like to go down the specialty route because we believe that then we end up controlling the arbitrage in the entire P&L, not just on revenue, but also on costs.
Okay, fair call. Which brings me to my next question as well. After the base of COVID got over, Dr. Verma, or rather during that time, some of the diagnostic chains have, for lack of a better word, suffered on the capital markets because the numbers were not quite up there. This quarter, I thought, maybe marked a bit of a change in both the numbers delivery as well as the guidance that they've given for the next year. What is your thought on diagnostics specifically? I'll come to hospitals at the end.
We continue to be extremely bullish on the diagnostic space because this is again about scale and size. When was the last time that you showed up at a doctor's and did not get a plethora of tests getting written out for you? I think the fundamentals of what is happening is rising life expectancy, increase per capita, and more importantly, awareness, especially in the wellness space, augurs very well for this industry. There are new growth initiatives. There are lots of roll-up models taking place. Take all the large listed branded players together, they don't even make 10% of the market. So there is a 90% huge mom and pop market out there which is ready for roll-up. I also believe that the per capita tests are rising. There's a lot more specialization that's taking place. So the yield per blood draw is going up. And I think now the focus, especially if I were to list what I think the diagnostic players should be do, is focus a bit more on their balance sheets where they need to improve their net working capital. I would like to see a lot more free cash flow getting generated. And I think once they have scale and size, they'll be able to lower their COGS because of the volume of it.
Got it. Okay, and there too, you reckon that your earlier thesis of the branded diagnostic chains slowly gaining market share, pricing power, etc., holds true? Because in between, there was a threat to that business as well by virtue of what ThyroCare or some of the tech-based players were trying to do. It was Tata MG, ThyroCare, and some others.
Interestingly, Niraj, this is one space where I think a lot of different models will come into fruition. So while you have the standard brick and mortar ones like the Lals and the SRLs and others, we've also experimented and made investments in the newer wave of diagnostic players like Redcliffe, where the model was to go to very small towns and use digitization to improve it. And then you have the Tata 1MG and all who've been using a lot of the discounting practices. To my mind, there is going to be a shakeout at some point of time where it cannot just be on cost. I do believe, again, specialization and quality is going to play a role. And clearly having a brand which is identifiable with quality and science will help you in your pricing machine.
Okay. Well, and it'll be interesting to map all the comments, viewers that have come in from the diagnostic players at the end of the earnings season and try and tell what happens, possibly happens in FY25 and where in the valuation bench framework relative to the past do some of these players stand at. It will be interesting to see what happens there. My final question, Dr. Verma, is something that you've traditionally been bullish on within healthcare on a lot of facets, but particularly hospitals as well, wherein you had told me earlier that Mumbai might be a separate case in point, but India-wide, those branded players which are creating or building, spending money behind building a brand will eventually be successful in the long term. There are 2 or 3 currently more in the offing. You stay constructive despite the valuations?
Valuations in Indian healthcare continue to be, for want of a better word, as crazy. There's no other word.
Crazy, okay.
Having said that, one has to be rational about approaching what the growth parameters look like. I have started believing that trying to establish a pan-India model is going to be incredibly hard to pull off. So kudos to the Apollos, Fortises, and Manipals of the world. But I think when we look at it from a Quadria perspective, we have now gotten a lot more into regionalization. The south, the west, the east, the north, they behave very differently. And what we've started to do is that whatever brands we own, we are taking them deep vertically rather than trying to diffusely spread ourselves. So as you will see our investments, let's say in Maxivision eye hospitals, you will see us penetrate a lot more in the south and west rather than worrying about coming out to the north and east. And again, in the hospital space, as I mentioned in diagnostics, there is a need for 50 more brands before we actually make real penetration for the Indian customer.
Got it. Okay. The opportunity size, when you speak to Dr. Verma, you gauge the opportunity size that exists and why you should look at that when you're trying to think of the valuations in the current context about what they could be. Dr. Verma, such a pleasure talking to you. I know we talk every 6 months. I would love to talk more, but I'm happy with the 6-month timeline as well. But look forward to meeting you when you're in Mumbai next.
Thank you. Pleasure speaking to you again.
Yep. Thank you so much. And well, viewers, I hope that gave you a nice view into what's happening in the healthcare space currently and how to go about investing. If you are an investor in CDMO, patience, patience, and patience. Thanks so much for tuning into Talking Point today.